Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
New York coffee. The market had since late January been pressing down towards the 50% Fibonacci line of the May 24 to February 25 move at 310.80, making lows not seen since last summer. Now in the big picture, I put this down to the dark blue September to October 2025 bearish shift pitch walk, in showing the way lower with the dark blue middle time above, currently at 346.70, capping prices in early and late January, leading to a weekly key reversal down in the last week of January. Prices approached and seemingly punched down through the dark blue lower time, currently at 303.10, with ease, all the way down to the 50% Fibonacci line of January 23 to February 25 move at 386.10, before turning higher last week. This has left us with a possible descending scallop pattern formed over the last 2.5 weeks. Now, if this is true, this pattern, and we are still building on the other side of the ski jump here to be certain, then look out for prices to possibly falter and then see a measured move, usually lower, though they can also hesitate before trying higher. In whichever case, close attention is needed on how far and in what shape and recovery higher will be right now. Additionally, you should also pay attention to another pattern, a late December last year to January this year, very lopsided head and shoulders top, with a bright red neckline currently at 319.30. As I said earlier, it is lopsided and is really in the wrong place, but as I said 2 weeks ago, and I quote, I'd like to give some potentials of a primary potential below in the 305.60 zone, just about where the dark blue lower time is, and a secondary harder to reach potential down in the 288.65 zone, in amongst the congestion seen in July last year. End of quote. Both of these potentials were achieved 2 weeks ago. There is something else I'd once again like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 43 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It's a multi-year 2012 to 2024 very large reverse head and shoulders bottom, for a bright red neckline on my chart, my monthly chart, currently at 277.70. The break higher over this neckline reached its primary target on the upside, but there was a secondary, harder to reach, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75, quite close in the scheme of things. Prices did indeed turn lower, up at this key combination of the 100% projected Fibonacci line and a target of 43.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20, and below the high of May 2011 at 308.90. However, in July and again in August last year, the market started to form a base on top of the bright red neckline, a horn bottom if you will. Then in August 2025, with its monthly key reversal up, the market raced all the way upwards and we saw an extension to that move up in early September 2025, but not reaching quite as high as we saw back in February last year, before dropping lower and setting up September 2025 as a monthly bearish harami. Since then, prices have trickled lower, such that we are now below the lower time, currently at 312.5, of the steep October 23 to August 25 bullish shift pitch walk, though not as yet having a monthly close below it. Now, I said 12 weeks ago that I don't favour this pattern much, but it's nevertheless still there, for now, as a pattern, and we'll see if it is worth anything by the close of February most likely. Prices have now sunk down below the 2011 high at 309 even, and are now on approach to, well, the key, the real key of the bright red neckline below. Consecutive closes below this, assuming no false breaks, consecutive closes below this, and we could look at the whole December 2024 to date action as a possible double top pattern, with all the implications such a move lower might have. Please just remember, these patterns here on this monthly chart are longer term, in some cases very long term patterns, and I cover them more fully in my long term coffee technical analysis video published in January. London coffee. 37 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press down, heightening the breaks lower. The reaction rise seen since early August pushed up through some significant resistances, and these turned into supports, and some very keen ones. Notably, the trio of interesting 50% Fibonacci lines was seen to be set up to test nowadays, and that's of the November 21 to February 25 move at 38.08, which is support, now becoming resistance, the May 21 to February 25 move at 36.49, which held up the market in late December last year, and crucially, over the last 2 weeks, the March 2020 to February 2025 move at 34.81. This last one, which so far has not been tested since early August last year. Between mid-December last year to the end of January this year, we had a small bull channel that ran into some pretty heavy-duty resistances overhead, in the form of congestion at the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90, plus the green short medium moving average, currently 39.56, and especially the gold long moving average, currently at 41.48, and the mauve medium moving average, currently 41.94. These resistances started the latest move lower and were the precursors to the main overhead resistance, which is the dark blue February 25 to date downtrend, currently at 42.20. This downtrend has enough of an impact with me that I drew a parallel bright red bear channel based around the September and December 2025 lows, with a bright red lower bear channel line currently at 34.29 and a slightly higher bright red bear channel line currently 42.60. I said 2 weeks ago, and I quote, "The break below the recent small bull channel is too early for targets, as it's not been confirmed, but I can lay out some potentials below of a primary potential down in the 38.90 zone, so not too far below, and a secondary harder to reach potential down in the 37.56 zone, reasonably close to December last year's low." End of quote. Since then, both these potentials below have been reached, leaving the question, what now? Well, we might take a leaf from New York Coffee's book and look at the last 3 weeks' actions as a possible small descending scallop pattern. It very much depends if prices halt their rise, and if so, by how much. To this end, I suggest keeping a close eye on the August 24 low at 39.32 and the green descending short medium moving average, currently 39.56.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.